Markets around the world are now entering into the Grinch period, and depending on what happens over the next 4 trading days, we may see a very different 2024 outcome. So what does this mean for your trading and investing portfolios over the next 12 months? Today we discuss that along with the weekly close importance for the S&P and Russell, the dark pool activity that's going on right now, and of course the rally that we expected over the last 24 hours. That along with yields getting close to a very important zone, and Bitcoin about to potentially make a new high on speculation about this ETF. Heaps coming up. Join us now. Well, welcome back everyone to The Daily Show. My name's Tom. We're talking everything to do with markets across the world, and there's a lot to discuss in today's video. Remember, if you like macro lead indicators and anything to do with markets, make sure to subscribe and smash that bell button. It really does help out, and I'm sure you'll enjoy the content. It was a big day of breadth across the board. You can see a sea of green, and greed almost ticked back into extreme greed as markets rallied off those big sell-offs from the midweek. But really, it was a story of everything coming back that we expect. Solar, clean energy, semiconductors, and of course, even biotech was coming through. And most importantly, defensives were still some of the laggards. They were the weakest performing, which usually means that Wall Street hasn't bunkered down yet into defending its position before potential sell-off. Speaking of sell-offs and things that you want to be looking at, make sure to sign up for our VIP free weekly newsletter for 2024. We just released one, which has some awesome stats going on about yields for the next 12 months and what we are expecting for them to do and when we expect things to happen. S&P 500 after a 52-week high followed by a loss of negative 1.45%. So these are really just stats that are kind of trying to find a reason to see whether there are further bear sells. This was probably the most negative stat I could find on the market, and it suggested that over the next 2 weeks, there was a coin flip chance of being up and down, more like chop. And it just seems like every one of these stats that you're running at the moment, no matter what kind of stat you're really looking at, most of them are coming in relatively, I would say subpar, nothing that's giving us too much edge. So let's talk about what could give us some edge. Here's a great chart. And what this chart shows you is the S&P 500 versus tech, industrials, consumer discretionary, financials, healthcare, and a lot of sectors. Now, what it's showing you is it's showing you a 30-day rolling correlation. And you'll notice that when it gets down to these kind of 60% levels, that's when you need to be starting to think about whether the market's been overbought. Also, if it's going too much on the opposite side, it could be that it's oversold. And this has actually been a fairly good indicator over the last couple of years of finding those extreme points. So what's it suggesting right now? Well, it's suggesting that there might be more to come in the rally as we haven't seen necessarily a full rotation across the board. And that might come as a surprise when you see some of these results. And this one might blow your mind. Sentiment reports are in, and it's a higher bull reading than last week with 52.9%, taking us to the highest level since April of 2021. And as we already mentioned last week, some of the lowest bear readings over the last 6 years. So does that mean we instantly sell? Well, it doesn't mean that, but it certainly means we need to be on the lookout for price action because bull-bear spread is also at a new peak here over the last couple of years. And you can see that it's gone up to this point, which is not very normal. And it really tells you price action is going to be a huge correlation here. Why do we think markets are able to hold? A lot of it comes back to our options discussion of this week. We know where the options kind of levels are, and we also know that there's this weird gravitation towards 4780, 4800, which we spoke about at the start of the week. And so far, the markets have kind of gravitated there early. They sold off, and then they've rallied back up. But not too much to go with from the options now. Remember, next week actually has quite a lot of options expiration because it's the end of the calendar year. So that'll be another big time event and a lot of big volume coming through there. Second to OPEX, but still low liquidity could cause some fireworks. Speaking of fireworks, this is something that I think we should keep in mind for 2024. While there's very little hedging going on right now, there has been a noticeable increase here in the VIX and therefore hedging that's occurring in the first quarter of 2024. Now, I did a bit of a survey and it seems like most of you think there's a sell coming in March of 2024. Statistically, it would be like February as well as a very big potential, and we'll get into that in future videos as we find out more about whether the Grinch is actually going to come this Christmas, as that may also be a helpful stat moving into next year. Now, we know that everything's overbought. Whether you're looking at percentage above 20 SMAs, whether you're looking at RSIs being overbought, MACDs, or any other kind of indicator, you're going to see overbought indicators. Now, that doesn't mean it's time to sell, but what it does mean is it's time to be cautious. If you're in markets right now and you're thinking, oh, I've got to get in, there's going to be amazing returns off this new high, everything's fantastic. Remember, practice risk management is generally the best way. And we always say patience, react, don't predict. There have been many rotational opportunities, and you haven't had to just go and look at the index and say, oh, I'm going to buy here, because that's going to be a little bit more difficult to replicate over time. We're not always vertical in terms of markets. We also know dumb money confidence is getting very high, which is also a warning sign. Over 25 years, I think we're on the third highest reading of this ever. So it's starting to get up there in terms of readings at this stage. And basically, it shows us that everybody's a little bit too hyperactive. We need to be looking for the signs if there are any. Now, some of the good things about this market, because it's been so aggressive and we've seen 52-week high-low spreads surging to historical levels, that has usually meant that over the next 12 months that we've seen very, very nice returns. And in fact, when we've had the indicator above 15%, it's been really good for high yield and really good for the S&P 500 as well. Only 2% of the time does this happen. Just to show you how rare these types of indicators are, only 2% of the time do you ever get these types of super bull reads. Here's what happens when the S&P 500 after the percentage of S&P 1500 stocks are above their 50-day average exceeding 90%. And again, the next 6 to 12 months suggest very positive outcomes. Now, it's going to be an interesting one because, of course, 2024 could be slated as either a soft landing or a recession based on bonds. And what we'll be looking for is the US 2Y versus the US 10Y to uninvert. When that happens, we can be a little bit more cautious on the markets and a little bit more scared, I would say. Small caps versus large caps. We first brought this up a few weeks ago, and since then, small caps have done very, very well. Just remember, they are slated to do better over the next coming months into February, because that's usually what happens. And here are some of the stats with, again, some of the reads that we've had from Russell. This one has enough data to suggest it has some form of edge in markets as well. We also know that calls were getting out of control, but as we did already think about, when we've had similar reads where we've got these huge spikes in the Russell, we've usually seen pretty good returns. So Russell is one of the ones that we'll be looking at very closely for a weekly close as well. So everyone talks about the Christmas rally. Now, there are two types of Christmas rallies. One is the 5 days leading into Christmas trade, and the other one is after Christmas into the new year. And we'll talk about those stats later on. But at this stage, 34 positive to 16 negative in terms of these Christmas rallies. I'm not so much interested in that one. What I'm interested in is the Grinch. And this is from Wayne, and it's really, really good data. Basically, it shows you here that if we have a positive Grinch, some of the years after that have been the worst, double-digit losses. So this is plus 3 days into Christmas, plus 3 days after. So far we've seen 2 days and we've actually been down. We kind of hope for a negative Grinch, because negative Grinches, look what January brings. It's generally very, very nice. So if you're a bull in markets, you really want negative Grinch, and we will be on top of that one for you next week. Let's move over to dark pool activity. Now, some big trades here. Treasuries just put in a massive trade, and there's been 2 of them now. Number 1 and number 2 largest trades in quite a while. And this all happens at resistance that we'll look at later on today's video. Could it be that yields are about to spike back up? This is certainly something that I'm watching very closely, because treasuries have had one of the best runs in a very, very long time. People have been trading them, and 2 massive prints at that resistance. If we get breakdowns here, it's going to be considerable, and I think all of that needs to be taken into consideration. Tesla also getting a large trade on it as it approached this high breakout. Is that a huge seller? Is it a buyer? Last time around this level, it's been sellers, so you would kind of suggest that is what it is. But we'll look at the price action again later on today's video. Let's talk about options now. In terms of the size, it was down a little bit, 37 versus 39.5. We expect this to drop off significantly up until the expiration near the end of the year. And 56% calls to 44% puts, with retail participation being 29% of the market. Now, if we scroll up here, you'll see that 90-day average volume differences. There weren't too many stocks that were notable here. We did have a couple of earnings results and things like that, but realistically, you can see that probably the biggest spec that I was guessing is probably Google. A lot of people are really buying Google. There's some good stuff we mentioned in the private stream this week and the public stream for the Monday open, but also with Google, there seems to be some announcements that they're going to go into, let's say, cost cutting thanks to probably AI and a few other big bits of technology. In terms of put calls, you can see here puts were getting stacked on the Qs, puts were getting stacked on the S&P, and the Russell actually had a very light day of overall volume. It was only 0.66 times its normal 90 days. So that's pretty low for the Russell. Let's jump into the charts now. So first up, Skew. Now we know Skew got crushed earlier in the week, and that was a day before the market had that little flash sell. Now Skew can predetermine some market turnoffs. It's one of the things that kind of brings with it sometimes a bear reading. And we know that when Skew got crushed in the past, it was a precursor to some nasty things happening on the markets. It's only one reading though. So let's look at the weight of evidence. The second weight of evidence is effective yields. And we know that effective yields have been dropping, which is conducive with the markets going up. I can also tell you that central bank liquidity has remained relatively stable over the last 24 hours. So nothing really updated there. US 10-year coming into a very key level of demand. I've got a set alert here button. I've also got an alert above this point to say that maybe yields are breaking out to the upside. And mostly I'm looking at this because it's been such a steady decline. There will be a rebound to mean at some point. And generally people are looking at the mean as the weekly 20 moving average, which is here. So you can see there's a bit of runway should yields start to find base. So we've got some alerts there just in case it does occur. Now that's going to lead into treasuries. Remember, we've had number one and we've had number two large trade. We've had support, 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 resistance. This is a key level. We obviously blew through that first level of supply and we're here right now with two massive trades. If this thing dumps down and we get an island reversal, so far I've got a gap up, if we get a gap down, I think it could be a trigger towards sells. Now, I'm not a big fan of trading treasuries, frankly. I'll invest in them, I'll swing them to a degree over multi-months, but they're not really a trading tool. In fact, in most of my trading career, there hasn't been really many times that you would want to ever trade treasuries or bonds. It's a big player's game and very, very difficult. But this is an interesting one. And I do think that it's leading into the possibility of a reversal, though, like anything, there are risks with it. Home builders, yeah, it's been holding pretty firm. Again, this is actually usually a sign that maybe the market is firming. If we make a new high, that's a good sign for the markets to make new highs, break out for the S&P, etc., etc. Dow Jones Transportation Average doing okay as well with a nice little rebound there. And we also have the bonds indicator here. Basically, it's got 3 or 4 days of sell-off. Now, if it doesn't pick up soon, it keeps selling off and the market keeps going higher, I will be ultra cautious on the market. I wouldn't want to see bonds saying the opposite of what the market's doing for too long. That usually is a very, very bad sign. So we'll be looking for that along with the other cues. So far, we've really just got the skew that's saying be cautious here in the markets, along with the market being parabolic in itself. What about copper? Well, it's really trying to get a good breakout this week. And as I suggested, I guess to me, these wicks, the way that it's setting up, looks like copper wants to break out. And if it does, again, it's kind of like saying, well, metals should be doing better. Iron ore, things that we've talked about before, into the Chinese New Year. Generally, this is a good period of time for it. So copper's looking okay on the charts. What doesn't look very good is the US dollar. It almost broke to a new low. It might have even done so over the last couple of hours. And you can see here that the US dollar is weakening pretty heavily. Now, it's in a super downtrend. We never got a change of trend towards the upside. We got close, but we didn't get one. And this is basically now marking out the possibility of going back down to parity, which is 100. So we'll be looking very closely down at this level, but I'm not sure if anything's going to hold the dollar if it keeps falling through. And remember, that kind of suggests that yields might be dropping a little bit more here as maybe we go one big push up in the S&P. These all possibilities. We must be paying attention. At this stage, of course, trend is up on the US markets, and that's what we do know. That's the only thing we really know at this stage. Gold, what are we looking at? Well, gold broke out above here, suggesting that it might want to go towards 2,075. And it was a fairly decent little breakout after we kind of speculated around this zone that it was trying to do this. Now, even if you got a short in here, remember, as we mentioned in the previous video, you were able to break even or get out of that trade. It did look a bit fishy after we saw what we did, which was here. And then when it came down, it wasn't doing what you'd hoped it would do. Now, as we can see here, we've got a bit of a rejection on the 2 hour. We would like to see a resurgence of strength in that candle. But yeah, it looks like it could be a breakout here. And yeah, something we're looking at for gold. I still think gold's just going to be up, down, and all around for a little period here. US oil actually had a pretty good scalp towards the short side. If you were a scalper, you would have definitely shorted there. This would have been an excellent break-even or TP zone. TP probably makes sense based on things like trend lines behind and the demand. And it's a good little day trade. And a few people in our Market Masters Club were on to that one yesterday. Now, I still think that oil can move up. Of course, there is some negative news coming out. We know CTAs have been negative, blah, blah, blah. A lot of those types of things going on. But funnily enough, in the face of adversity, what's happened? Technicals have shown us that the market has wanted to go up a little bit more. And I still think it's possible for us to hit this 76 to 77 a barrel. So oil is not the best technical I've ever seen in the world, but it is pointing towards a pretty nice weekly close, and obviously a base formation here looks okay. Tesla has a huge trade on it. At the same time, it's chopping all over the place. We know that if we go to a new high, that's a good technical sign for potential to move towards the 275 barrier, and something we will be looking at on the chart. So obviously that's something we're watching. A lot of people are negative on Tesla, fair enough, but I'm probably looking more towards the upside. If you were to be a bear, this is around the right time to basically go for it. And the reason why, with proper risk management, would be that we've pulled back after doing a little switch here. So, this is where most people's stop losses are going to be. If we do get past here, therefore, you're thinking about the rally up. And if you're trying to go short, it's about the right area on a small time frame. So, yeah, that's playing the odds both ways, but they're the kind of not suggestions, they're the areas that you could be looking at from a technical zone. Let's have a look here at energy, and you can see that energy is not really doing much, but energy stocks themselves, if they do break through 86, could be a big deal. And so far, that's been bullish as a sector since we first started reporting on it, but not, I would say, exceptionally bullish, just a little bit. It's been a huge laggard, though, recently. German market still is relatively weak as it consolidates to the downside. Nothing much to report on the German market. The Australian market contending with one of its most important levels. This is a huge zone, this 7,600 zone. And if it does manage to get through here, then we're probably looking at a 7,800 read early in 2024. So the Australian market hits first TP. It's doing really well. Now, I'll be looking at the US 2K weekly close, so make sure to sub for this because these weekly closes are going to be a huge deal. They're going to tell us a lot about what the market wants to do next, and I would go with, everything really comes down to the Friday and how it trades because at the moment it looks like consolidation. I don't really know a direction here. Could be accumulation, could be distribution. We don't have the evidence yet. The Nasdaq's a similar thing. How does this thing break? It made a new all-time high this week. Will it hold? Will it close above? That's a question and we'll soon know. And then, of course, the S&P is kind of similar. When we look at it on a weekly, it's right up there with almost new all-time highs. So it brings us to the US 500. And I've done a bit of thinking about this. And as we said in the last video, this level here, which is around that 4,750 zone, this is kind of where we expected the market to potentially find some weakness. Now, just before it hit it yesterday, it found some weakness, then it rallied straight back up after finding that. And the intention of this market is still bullish, you would think. Remember, to stop a hugely parabolic market, generally, or to stop a freight train, takes time. So usually you're either going to go sideways into a huge fall. In traditional, when you go parabolic, these types of pullbacks are pretty normal. And usually they're swiftly followed by fairly large moves to the upside. You're looking for a lot bigger sell than just what we saw this midweek, traditionally. Now, did we get a new low? No. Did we find demand? Yes. Did we rally? Absolutely. Could I see bears here? Yeah, I guess I could. Would I do it? Not personally. I don't think it's strong enough. But, I can see why people would be making that case, and that's why I'm putting it in the video just in case. Weekly close will be the most important thing for me on the S&P. I'm going to be looking at it quite a lot. And obviously at this stage, you've got to kind of have the bullish intentions on the market because it hasn't told you to be terrified just yet. Bitcoin, interesting one. I think it looks like it wants to break back out. Speculation on the ETF. I saw some ads on X and everyone's getting wild on Bitcoin ETFs. 43.5 was a big level. We're above that at this stage. And you can see we're putting in dojis. I've got a little alert above here. Once we get through that zone, you would think we're going towards that 46 to 48, which is actually one of our major targets. So don't get me wrong. When this happens, I still think this was going to be a possibility. And then this before the halving seems the most kind of likely circumstances. But Bitcoin having a good time in the markets. Ethereum also putting in some good work on the base here as we see some wick rejections, but also a decent formation of structure. So you've got some supply, you've got some beast moding into that, and you've actually broken that a little bit here. So that's suggesting as well that we might be moving up a little bit in crypto from a technical standpoint. If you enjoyed today's video, make sure, of course, to subscribe, get the free VIP weekly newsletter. Links in the description down below. Now, remember, the last one for 23 is out now. So basically, we won't have another one till after the first week of 24, but there'll be lots coming next year. And for the news ahead, just remember it's Friday, core PCE. That's probably the big bit of news that's remaining. And this may move markets a little bit. So expect some vol coming into this. But really what we're looking for at the moment is going to be focused on the Grinch. And do remember that over the next couple of weeks, in particular, volatility or volume, and liquidity goes down. So weird stuff can happen on markets out of nowhere. Be careful out there, guys. And thank you so much. Bye for now.